Now I've discovered something about the US markets that has become incredibly predictable and repeatable. It allows me to trade only 60 to 90 minutes in the morning to consistently find profitable trades every day before going to my full-time job teaching people how to trade. And this hasn't just worked for me, it's worked for a ton of other people and has stopped them from jumping from strategy to strategy, ending their years of struggle with trading. They finally found something that is consistent. I've narrowed this discovery down to a combination of 3 powerful market patterns and tricks most people overlook. Once you know all 3, you will never look at the market the same way again. You will consistently be able to spot profitable opportunities in the market, and I'll also show you a trade I took this morning that has a bonus insight that will bring everything together for you. Now I used to be like Mark. Mark has always consistently lost money trading because he has no direction, and here's why. He doesn't look for a specific pattern to trade. He doesn't patiently wait for his trading plan to happen. Instead, he is constantly trying to capture every move in the market, not wanting to miss out on any potential money he could make. Mark's approach is chaotic. He jumps into trades just because the market is moving, assuming he could catch a quick one, but it never works. His trades are always rushed based on guesses rather than waiting for a clear plan that he can consistently execute over time. Instead, he consistently loses money over time. Now that was me for years, but then I started to trade more like Alex. Alex knows something most traders don't. To be consistently profitable, he knew to wait for specific patterns and other tricks he observed about the market, because patiently waiting for a specific strategy every day and those factors to show up is how you become profitable. And if those patterns don't show up, he simply takes no trades and moves on to the next day. He's not frantically trying to capture every move in the market. As aspiring traders, we all want to be as close to Alex as possible. So let me walk you through the 3 secrets someone like Alex waits for every day to show up in the market before taking a profitable trade. Now let's jump into the first secret, which is extremely crucial to understand where the opportunities in the market are. But if you don't couple it with the second secret we're gonna go over, it won't matter. Now, when the market has a massive move in one direction, most traders get too caught up, like Mark, thinking how they can get in and catch that momentum in the same direction. But this usually baits them into a losing trade because the market is actually overextended when it gets to spots like this, and it needs to snap back. The market likes to move in healthy, methodical movements. Every move up is countered with a healthy pullback. This is how a stable trend operates. An unstable trend is when it shoots in one direction extremely quickly. When this happens, it's likely to fail because of the rubber band effect. To become healthy again, it needs to have a pullback. And because it's so overextended, that pullback can be very extreme. Using this knowledge, we can spot potential reversal opportunities when the market gets overextended. Now, if you still need a trading platform to look for these moves in the market, I've used NinjaTrader for over 5 years for all my trades, and I've found it to be the best platform out there. You can check it out via this QR code or the link in the description. Now, this second secret is even more crucial because it times your entries with big players and market moves. And secret 3 will show you the final piece that ties it all together, giving you the ability to consistently find high reward opportunities while avoiding false signals that just losing these first 2 tricks can give you and cause you to lose money. So here's the thing, most traders don't realize that the market actually baits them. At 9:30 Eastern Standard Time, when the US stock market opens, big players like hedge funds and institutions come in and push the market in one direction. It tempts traders like Mark to jump in thinking they're gonna catch that initial move, and they FOMO in not wanting to miss out, but that move often sets them up for a reversal in the opposite direction. Just kind of like we talked about with the rubber band effect. This baiting effect often repeats And it's the reason timing is so crucial. This timing often happens 30 minutes after the US market opens. It can be slightly before or after, but that's when you want to be looking out for it. Now, I've tracked this pattern over just the last week, and it's happened 3 out of the 5 days. Knowing this timing lets you anticipate when these moves are likely to occur, and you can show up to the market with that in mind and plan every day. I've also created a free 30-minute reversal strategy guide that shows you more setups and in-depth on how to use this properly. And you can download it via this QR code or the link in the description. But there's one secret that is the most important part, and it's where everything comes together. Let me walk you through a real trade I took this morning in under 60 minutes that made me almost $1,300 to show you these 3 secrets in action. Now, before the market gets to the timing and the rubber band move, there's something else I want to see. I open my charts every morning looking for key swings in the market. I mark them out and wait for the market to hit those zones. These allow me to understand where the key supply and demand structures of the market are and where the market is likely to reverse at. If the timing of the 30 minutes after the market open and an extended move happens into that level, it's highly likely for a reversal when all 3 of those line up. These are the key big picture ideas I need to see for every trade I take. But there's one more thing I use to really confirm getting into a trade. Otherwise, it's easy to jump in too early and create losing trades when your idea still works out. As the market sold off into this level and started to slow down at the support zone, I watched it develop. The old me, Mark, would have jumped in on the first bounce. It's easy to get excited when you're seeing a potential opportunity and you don't want to miss out on it. But remember, it's not about catching every bounce. It's about catching the right one. And the right one is when the market makes a bottom and then makes one more attempt to go lower. From a technical analysis standpoint, this is starting to show the downwards movement of the market is shifting. From there, I'll jump in at the close of a strong bullish candlestick and manage the trade from there. The whole idea of waiting for this second bounce is that you don't know that it's gonna hold this right here. There's the potential that it instead just keeps going down because, well, initially, this is some strong movement here. The trend could continue lower. Essentially, we want a confirmation that the trend is ending versus getting in too early for a reversal when the trend is gonna continue lower. Now, the last thing, if we go to the actual real recording of jumping in on this trade, is I like to see a strong candlestick form. Essentially, this double bottom here, now this is looking at a 5-minute chart. You can enter with this strategy on a 1-minute chart or a 5-minute chart. We'll look at both of them. And on a 5-minute chart here, you can see that it's essentially made a double bottom and a higher low. And with this nice reversal candlestick, with a little bit extra confirmation, I decided to jump in, bet the market was gonna go higher. I put my stop loss, essentially where I'm gonna get out of the trade, below the swing of this candlestick right here, with the idea that, well, if it breaks below that, I think it's likely that it's gonna continue in, a stair-step pattern fashion down. And so I'd rather just get out of it at that point. Now, before I show you how I manage this trade, pause and think where you would exit this trade based on everything you know about trading and have learned so far. Think about the market structure, the trend lines I've drawn, the support and resistance levels, and the risk reward that you would like to go for. So to show you how I managed it, first I put a sell order for 2/3 of my trade. I have 9 contracts. I put a sell order for 6 of those at the previous swing high here. Essentially, my thought was, hey, I think that's where kind of this rubber band move has the potential to go. It's gonna snap back to that area. And so That's a really key way to be using these rubber band moves for your trading. And then second, once it kind of gets going, I'm gonna move to break even. So to just zoom forwards a little bit here, once it starts to get up there, I move pretty much the whole trade to break even. And the thought is I'm gonna get out of most of my trade at that sell limit, but I'm gonna let, this is a big picture bottom I'm looking at. It could keep going higher. So this is a 1 minute chart to show you now. Basically, it's just a more zoomed in version. If you wanted to get in on this, if you were trying to use this strategy on a 1 minute chart, essentially what you would be looking for is, there's this downtrend that was broken, that rubber band move, essentially at 8 o'clock, which is 30 minutes after the US market opens. It opens at 7:30 for me. It had kind of that whipsaw rubber band move around, really got going in this direction, and then it bottomed at 8 o'clock. And I, of course, waited for more of that confirmation here of that double bottom and that higher low to be put in. And then 2 clear bullish candlesticks, I think, makes a 3-line strike pattern. It's very, very powerful for confirming and jumping in on the trade. And then from there, it's just kind of letting the thing play out. It got a little scary there for a minute with chopping around, but here it spikes up, knocks me out for 2/3 of my trade at about $1,000. And then from there, it's managing the rest of the trade and seeing, okay, is it going to slow down up here like I initially thought? And I need to pull my stop loss up a little higher just to, give it some wiggle room. But again, think about the risk reward. When you're managing a trade, you always need to be keeping risk reward in your mind. You have your initial risk reward of, hey, I'm risking, $100 here and I'm looking to make $200 up here. Well, as the trade develops and as it's up here, if I only think it's gonna go up here, but my risk is all the way down here, you're risking, 10 to make 1 at that point. And so you have to be moving your stop loss to adjust for that. So instead of, okay, I'm thinking, well, we could go up here and that could be it, but I think, there was a potential to at least go up here. Well, I'm gonna move my stop loss to here, and that keeps the risk reward positive, at least 1-to-1 or still 1-to-2. And so that's what you want to think about when managing your trade. And as well, you can see there's kind of a sloppy uptrend here that I'm thinking about. And so that's how I'm kind of managing it going forwards, is keeping that math in mind, but also looking at the market structure and seeing what I can get. I like the spot here to get out if it broke all the way down, because I think it kind of got overextended there. And from there, it essentially knocked me out, closing the total trade up for about $1,300. Hindsight, maybe I should have waited for a clear break of this uptrend, but it ended up being a good spot to get out. Now, if you found this way of looking at the market game changing, make sure to subscribe to the channel so you can accelerate your journey to become a consistently profitable trader even more. Make sure to grab that 30-minute reversal strategy guide that goes more in depth into this and shows more examples. And if you don't have a trading platform, make sure to check out NinjaTrader. And if you want an even more in-depth walkthrough of how this strategy works, check out this video right here.